For those people who don't know, like even the 101s of debt recycling, let's just start there because I feel that maybe at this stage people are a little bit confused. What is debt recycling? Could you just explain that?
Yeah, it's very simple. It's moving debt from owner occupied into investment property and around again. And financial planners charge a lot of money for this. Every 6 months, they'll go to their client. So what they're trying to do is reduce that non-tax deductible debt and then put it into a tax deductible environment, say shares, or in our case, property.
Yeah.
So it's like a visual circle where they're paying down money on their home loan, unoccupied home loan, and then putting it into an environment where they could, buy property or shares, right? And that's what debt recycling is. You're taking it out of non-tax deductible debt into tax deductible environments.
Sure, sure. So it's almost like a refinance, a traditional refinance, but from a non-deductible environment to a deductible environment. And once again, just ask a silly or plain question, I should say, why is that good? Like, great, you've transferred some debt. Debt is debt, right? Debt is bad. Why is this a good thing?
Yeah, a number of things. Convenience. So, rather than having to come up with another loan application that goes forever, taking forever to collect all those documents, to have that ability to split your debt, $50,000 within 24 hours is great. And so that will also make it easier for your accountant to claim that tax deduction. In a traditional way, you would have probably attached that 50K to your owner occupied property, and there could have been some issues with tax time because it's all messed up. Owner occupied debt and tax deductible debt was in the same loan account number. In
Mhm.
this case, creating two loan account numbers. So there's convenience, there's tax efficiencies, there's an ability to manipulate your equity how you want, when you want, and you don't have to keep going through the process of applying for loans.
Sure.
So
So
now
is
it's
it
not for
true?
everyone. Okay, it's not for everyone. It's quite an advanced topic.
Right. Maybe let's get into like who it's not for in a second. But once again, just to kind of clarify this whole concept. So let's say you have this master limit, this umbrella of $3 million, and let's say I've already utilized $1 million, half of it for my principal place, half of it for my first investment property. Let's say I want to buy another investment property and I need another $500,000 of debt for it because I already have this $3 million of pre-approved, so to speak, master limit. Does that mean I don't need to do all the paperwork? Don't need to like engage with the bank, the ring roll, and I can literally just buy a property, tomorrow because it's already all approved? Is that what it is?
That's it. That's it. Like imagine that you can go. You spotted a deal. Okay, the guys need to sell quickly, and you've come in and say, "Listen, provided the building and pest is okay, let's
Yeah,
settle on. Let's settle in 7 days' time."
that
All
is
right.
phenomenal.
It's amazing. I know, and I'm not sure why it's not hitting the media more, or brokers don't bring that up. But for a lot of people, that capitalizes on opportunities. It also helps you for emergencies.
Yeah.
All right. Now, it's a very simple process within the bank. It usually takes 48 hours to set it up. But you can see now that we're having 10 splits available at your convenience. And you could have interest only, principal interest, fixed interest, variable, all those sorts of things. So yeah,
What's
and
making
a
me
lot of your
really excited
clients,
What's making me really excited, sorry, John, to cut you off. Just quickly, what's making me really excited is like, everyone thinks the property market is falling, and it is falling in Sydney and Melbourne, but there's parts of Perth, parts of regional Australia, especially Queensland, where the market's still, yeah, let's be honest, like going up at a healthy rate. And if you talk to an agent or if you try to put offers on, your offers are being rejected, they'll be outbid, you're missing out on properties. If you can be open and honest with a real estate agent and say, look, this is my offer. I know my offer is a little bit underneath the true valuation of the property or maybe your other offers, but hey, I can settle this bad boy in 10 days. I can settle this property in 15 days, provided the building and pest is okay. I don't have to wait 30 days for finance. I don't need to wait 45 days for settlement like all your other offers. This is going to be the game changer between you being able to secure a property in those hot markets versus not. And I guess more interestingly, like being able to secure it at a sharper price because the terms you're offering are offsetting potentially the lower price that you're offering for the property. Like that's kind of the alarm bells, or not alarm bells, the light that's going on in my head.
yeah. Yeah. And where this all came from, PK, is I've been so humbled to keep servicing clients of yours from 2 years ago. And, clients who were buying in Adelaide 2 years ago, hundreds of thousands of equity.
Hmm.
Brisbane, as you were talking about, remember the days of you mentioned the Gold Coast and
Yeah.
the data. You kept saying the data is showing, just like you're telling everyone right now, the data in certain pockets of Australia are very, very strong. And so when I've started to set up the next series of pre-approvals, I really wanted them to have that flexibility to make cash offers, to recycle their debt from their home onto their investment properties and things like that. So if your broker mate is not aware of it, it's probably because they're not an investment property focused broker. And just generally speaking, it's not advertised by the banks as much. So a suggestion is go to your broker and ask them, have you heard of this master limit? Google it, obviously. And obviously, don't call me, but email me and I'll try and get back to you as much as I can. So I'm very humbled by all the
Sure,
emails, of
sure.
course.
And what's the impact on borrowing capacity? Everyone's borrowing capacity is being shrunk with every single rate rise. We have a master limit of, let's say, 3 million, to take that example further. Does every rate rise mean that 3 million becomes 2.8, 2.6? Or you're shaking your head? Just walk us through that.
Yeah, this is the beauty of it. You've locked in that limit
That
forever.
is what? That doesn't, it sounds too good to be true. Like, honestly.
It's true. Yeah, it's true. It sits there for a 10-year period. You've been given your limit, and that's it. So it's an incredible opportunity to just take advantage of your equity now, locked in for now. It doesn't matter what's happened in the future. They've made it available. It's a bit like, how when you apply for a credit card and you've been given, I don't know, a $20,000 limit. Doesn't matter if you've lost your job in 10 years' time or 2 years'
Yeah.
time.
Yeah.
You've always got that limit. Same principle applies.